Hello and welcome to the FT headquarters. Today I have with me Patrick Mange, Head of APAC and Emerging Market Strategy at BNP Paribas Investment Partners. Our subject for the latest video in the expert series is investing in emerging markets. Hello Patrick.
Hello.
Which are the emerging markets that you would recommend that people should look at for 2015, and which are the key characteristics which unite those markets?
So if you believe that the dollar, and there's good reasons for that, will continue to strengthen a little bit compared to what it is today on trade-weighted terms, if you believe that commodities will remain lowly priced like today, I mean lowly in brackets because they're still, compared to 15 years ago, quite expensive, but priced less than a few years ago, maybe even going to see the prices move down a little bit further, like people seem to expect on crude oil in particular. And then you have already two assumptions which tell you what to do on emerging markets. You would avoid the users or the producers of commodities and try to buy the users of commodities. Terms of trade effect, positive for the one, negative for the other ones.
So we'd be avoiding Russia?
No, you would underweight Russia because
Exactly.
it's
We'd
negative terms of trade.
Yes.
You would underweight Brazil,
Yes.
everything being equal,
Absolutely.
everything
Yes.
else being equal.
Yes.
You would underweight Mexico,
Yes.
which has a negative terms of trade effect. You would underweight Chile, for example. Most of the countries have to be found in Latin America.
Yes.
But then there's a few other elements which you have to take into account, not just commodities. So dollar strength makes the funding a little bit more expensive. Yes. For many countries that have external debt. That's the case for the current account deficit countries. So that's another criteria you should look at. Basically here too, there's a momentum question and there's a level question.
Yes.
So in terms of momentum, all the five fragiles are doing better. Yes. But still there's some countries which quite big current account deficits. Brazil, for example. Yes. Brazil is a net commodity exporter, has a current account deficit, is valuation relatively high. So Brazil is definitely not the market I would like to be in at the time being. Yes. But the Asian markets are just showing the other characteristics, the positive
they're the ones we should be overweighting?
I believe so. Not all of them, of course. Malaysia is a net exporter of commodities, for example. And this is one of the exceptions in the PAC, and it's quite a small market. But you look again at China, at Korea, at the Philippines, other Asian markets. They are really the winners from lower commodity prices. And that is going to raise the profit margins. On top of that, most of these countries, if not all, have current account deficits which are positive, do not need external financing, and most of them are quite sound in terms of fiscal deficits. Currently, if you go with fundamentals, you would go with these countries rather than LATAM or EMEA.
Well, Patrick Mange, thank you very much. It's been a pleasure, and hopefully we will meet up once more in 2015 and see what this list of winners and losers looks like.
Okay, thank you. Hopefully, yeah, I'm right. Thank you very much.
Thank you very much.